Good morning, trading world. It is March 22nd, 2021. It's about 7:30 a.m. here on the East Coast, and this is my pre-market outlook. Coming into this week, it's a new week, same old worries. So we kind of got to the bottom of a range that we've had, or near it, and we're trying to figure out whether we can push lower to establish a new lower range. So all of that is going to be in the cards this week. So things that you want to keep your eyes on today and throughout the week. Continue to keep your eyes on bonds and rates for any sharp moves that will anger the overall market. One of the important things that I use daily in my strategies is focusing on day structure. And we want to pay close attention to identifying those day structures as early as possible. And one of the structures that will probably be in focus a lot this week is the range day structure. The range day structure, it will offer lots of two-sided trade opportunities during the same day. A range day, I'll go over again. As you can see, we started out here, but within a range day, it's possible that we could go here, and then here, and then back again. There's no guarantee that we get full both sides of the range, but a range day does offer two-side trades. The opportunity to go bearish one part of the day and bullish another part of the day. So any range day structure, it could be here, back down to here, or it could be here, back up to here. And then it's quite possible that we get all the way, back and forth a couple times. Those are all range day structures that you have to be aware of. And on range day, once you identify a range day, you'll notice that the indicators that work best on range days are going to be things like your Bollinger bands, Keltner channels, and price channels. These are going to be some of the indicators that work best on these range days. Now, with the type of environment that we're in, I want to give you a warning. Be very careful of these steady stair-step up moves that can be wiped out really quick today, and then start over. I do see that happening at various points during this week, where we can work steady up and then be wiped out, take an hour to go up, and then that whole move that took an hour to go up is wiped out in maybe 15-20 minutes. So be careful of that. But those are all parts of range day structures. All right, let's get into the outlook for the SPY and the probabilities of the different outcomes that we see coming. When I started looking at things this morning, we hadn't quite made it to the 390 level. We hadn't made it through this band here, but we've broken through this band. So now let's see if we can hold this band and support this 390.09. Let's see if we can hold that. If we can hold that, we're going to push toward this 392 area. We'll push toward that 392 area and possibly try to reach 393. But let's try to get here first and see if momentum continues. See if we still have strength in the MACD, strength in volume as we go through or to this level. But if you get a situation where we're coming into this level and price is still moving up, but volume is moving down, and your MACD, the momentum is losing on your MACD, that's a clear sign that we're about to reverse and go back toward the other end of the range. So you want to be careful today. We in this range day type of structure, it is possible to retest the low end of the range at some point today. So that is outcome number one, which I give probably a 50% chance today, probability. And again, in keeping with this range day type structure, our number two outcome, which I give about a 40% probability, is consolidation basically between this 388 area here and 392 area here. So a consolidation of just back and forth until we get up enough strength to break out either higher or lower. And if we are doing that, if we consolidate for some time in here, again, you want to watch for divergences and see where we are at each end of the range as we consolidate. If we're at the top of the range or coming into the top of the range and we're consolidating, use your RSI to see whether we're in overbought or oversold territory when we come into each end of the range. So that is your number two outcome. Number three, the number three outcome has a 10% probability today, and that's for the trend up day structure. And the trend up day structure is something where your moving averages will help you better on, because a trend up day structure is basically going to be this powerful move almost straight up till about 11, 12, or 1 o'clock, and then you'll get some kind of back off or consolidation and kind of fade going into the later part of the day, and then around 2 or after 2 o'clock sometime you might get a little give back. But that's going to be the trend day structure. And what you'll notice in your trend day structure, if you're using a moving average, just like this moving average here in the Bollinger band, if this was a downtrend, if you were looking to be bearish on this downtrend, your moving averages is going to give you a great entry signal, because you can enter as you hit the moving average and use that as your basic stop loss, or if we break through it, the trend is basically not working at that point or changing. But you enter at the moving average and then try to find either a previous low to target, or use the ABC routine, where as long as each candle doesn't close above the halfway point of the previous candle, you stay in it. And as soon as you get a close above the halfway point in the previous channel, you exit out. So that's what we do on trend up or trend down days. So again, outcome number 3, 10% probability of having a trend up day, headed toward this 393 area here. Again, I want to say be very careful of the steady stair-step moves up that can be quickly erased by these fast moves down to retest the lower portions of the range, because I do see that as a possibility today. But overall, it seems to be a range day type structure in the making today. As always, know your risk and make sure you know exactly how much you can afford to give up in a given day, because the biggest battle in trading is not knowing direction or not knowing where something is going, but it's managing risk so that you can stay in the game when you do get those bad days or wrong directional calls. That in itself, for me, is what's key to the whole game, is managing risk. So again, wishing you a profitable day and make it a great one.